Consumers just got a lot more confident ahead of the election. New data from the Conference Board shows a big rebound in consumer confidence to a level of 108.7. It's the highest reading since January, and that was the biggest monthly gain since March of 2021. Optimism about jobs also lifted the outlook this month. The rosy view is in contrast to the number of job openings, which this morning fell to less than 7.5 million, and that was below estimates. Here with the breakdown of the data is Steve Odland. He is president and CEO of the Conference Board and a CNBC contributor. Steve, so much to run through. Welcome. What are some of the standouts for you? I mean, this labor market stuff is great.
Well, it is, because the Consumer Confidence Index basically asks people, how are you feeling? And there's a big correlation with how they are feeling about their jobs. This means that consumers are pretty satisfied and pretty confident that they're going to be able to keep their jobs and continue to move real pay, real wages upwards and increase their buying power. So that's all very positive. This is towards the upper end of the range that we've seen in the post-COVID era, but it's still a relatively tight range. The bad news in this is that you still have inflation, lots of worries about inflation. They don't believe that it's been cured. The Fed has come down, as we know, a little bit, but that still isn't enough. And we're projecting at the Conference Board that it's going to take another year before consumers really see the effects of the Fed rate cuts in consumer debt levels. So this is a problem right now. So you're in this feeling good range because of real earnings, but not so good about the cost of borrowing.
Is it true also that their inflation expectations ticked up? Yeah, I see this here. 5.3 from 5.2, not the end of the world, but is that a significant data point as far as the Fed is concerned?
Well, they still think there's going to be inflation. Now, you have to remember they're really outweighed by the inflation in groceries. And because this is where, normal everyday Americans are getting really whacked in their pocketbook because it's pretty low on Maslow's hierarchy. Everybody has to eat. They've traded down everywhere they can. All these parking lots are full. So you see this situation where they're worried about grocery prices. Gas prices have come down a little bit. They feel a little bit better about that. But a lot of their pocketbook going to just plain eating.
You did a poll of the battleground states. What did you find? And have you done this before, or was this a special one-off for the election?
No, we do an ongoing check on the big states. And two I'd like to point out in particular. Two of the battleground states are Michigan and Pennsylvania. Ironically, Michigan looks pretty good. Consumers are pretty confident. It's sitting in a pretty stable range over this period of time, not a lot of movement, and it's been trending with the national numbers. Pennsylvania is just the opposite. Pennsylvania has been in the doldrums here. They got a little bump this month, but they're not feeling as confident as the rest of the country, and it could be, this pressure again on inflation and the economy, but that is worrisome because that state is probably the state that's going to determine the election, and you wish that consumer confidence would be higher for an incumbent, but it does lean that they are not as highly confident as the rest of the country.
Well, we're all just eager for the data points, as many as we can get on what's going on in these key states. One that really jumped out to me, Steve, is people's opinion about the stock market. Is it true that this confidence is the highest since 1987? And is that a coincidence? Because we know what happened in October that year, or is that just when your data started?
No, that's just when it started. But, this is really high. And, we're sitting here, within 1% of an all-time high. They're feeling good about their 401ks. They're feeling good about their pensions. They see that. Not everybody holds stocks, of course, but you see it in their retirement funds. And that gives them great confidence because you have a lot of boomers going into the retirement years, and they're watching it more closely than probably any time in the last 30 years. So that's a really good thing because, again, it gives them confidence that they can spend, and that's an important part of holding GDP growth up.
All right. Well, I think a near-term data point to perhaps be cautious about, but obviously stocks have risen since 1987, so maybe it's all okay. Steve, thanks for bringing this to us. Steve Odland with the Conference Board. Steve will be back with us on election night.